The unemployment headline news. Unemployment's down from 3.6 to 3.5%, and new job creation in the month of March, reported by the Bureau of Labor Statistics, is at 236,000 jobs. There is a little bit more behind these positively looking headlines. A deeper look actually shows that majority of the jobs, 72,000 exactly, have been accounted for in leisure and hospitality in the month of March. This sector has been a huge driver of job gains since the pandemic, because it also accounted for the most massive losses during the height of COVID. 98% of those jobs have now been regained. So going forward, we may as well assume these large numbers are going to be disappearing. In addition, average hourly earnings were up 4.2% in March, but that is a drop from 4.6% from last year. Average weekly earnings were up 3.3% year over year, which is also a big drop from the previous reports. It also appears that some companies are actually cutting hours rather than jobs. So the average work week fell from 34.5 hours to 34.4 hours, which, if you translate it into number of jobs, equates to 468,000 jobs lost. There is also disappointing news coming from the private sector when it comes to unemployment. There were only 145,000 jobs created in that sector, and annual pay for job stayers increased 6.9%, and job changers saw an average increase of 14.2%. These figures look high, but they have been moderating and showing lower wage-pressured inflation. A total number of people collecting unemployment currently is at 1.823 million, which, bottom line, is saying there is weakness, recessionary weakness, showing up. Job cuts, a report from Challenger, Gray, and Christmas showed that there were 90,000 job cuts in March, which was 15% higher than February. The technology sector led the way, accounting for 38% of all of those total losses. On the home front, CoreLogic Home Price Index showed that home prices nationwide rose 0.8% from January to February and were 4.4% higher when compared to February of last year. Going forward, CoreLogic is predicting that prices are going to go up 0.2% in March for an annual rate of 3.7% increase, which is up from a 3.1 number reported in January. CoreLogic's chief economist, Selma Happ, says U.S. home prices rose 0.8% in February, double the month-over-month increase historically seen, and indicating that prices in most markets have already bottomed out. She also noted that pent-up homebuyer demand is responding favorably to the lower interest rates in very many of those markets. Recession-like conditions continue in manufacturing, whereas it is in the contraction territory for the 5th straight month. That's all I had for you for this week. Hope you have a great one.